In this week's market preview, we noted that investors had begun pulling at the threads of the risk-on rally after the election. Following President-elect Trump's midweek speech, the dollar has now recoiled, leaving the dollar index about 3% below its 14-year high set at the start of January. Here are the three major spot rates: euro-dollar, dollar-yen, and the pound versus the dollar. Let's start with the euro, where political risk was the main driver at the start of the year. Some investors were reinforcing the view that the euro would slump to parity with the dollar. In part, this is on account of the number of elections due to be held across the eurozone. However, it would seem that fears over the translation of Trump's victory into expansive economic policy are having a larger effect for now. You can see that the euro is pushing towards overhead trendline resistance, which may prove significant given the heavy weight of short euro positions. The Japanese yen was weakening nicely towards 120 per dollar as 2016 drew to a close. The correlation between the rising real yield differential and the rise of the dollar against the yen has recently strengthened. Earlier, it was the yen that pushed back against the dollar, sending the spot rate down to 113.75. The rise of the dollar since the US election began at around 105 yen. Meaning there is ample scope to its purchasing power in the event that investors remain nervous. Finally, the British pound is gaining against the US unit, and that is despite the albatross of Brexit and its implications for the outlook of sterling. Investors earlier this week drove the pound lower to 120.38, mostly on the shoulders of Brexit woes. The pound has subsequently jumped by 2 cents against the dollar. That's all for now, but join us for more market color online at ibkr.com/ti. Hello, thanks for checking out our YouTube channel. Subscribe by clicking the button below. And over here, check out the latest short videos, market color, and digital exclusives.